Hello, welcome to episode 10 of Real Estate Education. I'm going to give everybody a minute to jump on. This is David. Oh, let me not pronounce your name incorrectly this time. Go ahead, David, introduce yourself. My fault.
Hi, I'm David Toloff. I'm a senior loan officer with First Home Mortgage, and we're licensed in DC, Maryland, and Virginia.
Aren't you licensed in Pennsylvania as well?
Not anymore. There's just plenty of business to be had over here, so I dropped that one.
Okay. Well, you definitely have a lot going on. Well, go ahead and start. Well, actually, first, I want to welcome everybody to episode 10 of the Real Estate Education Show. I actually decided to rename the show, and last week I asked for everyone's opinions. So I'm going to ask you what you think it should be, David. I had two suggestions, and then I will announce what it is. First one was the home front, and the second one was real estate tips and tricks. What do you think between the two, or if you have another suggestion?
I think the home front is pretty neat. I like that.
Okay. Well, drum roll. It is the home front, so that's what we're going with. We have officially renamed to the home front. And thank you for voting, everyone who voted. So if you would like to go ahead, anyone who's watching, please, if we say something you like or love, please hit that like or love button. And please share the broadcast or tag a friend that you think may benefit. Today we're going to talk to David about tips and advice for the new home buyer. So if you'd like to go ahead, David, and tell us, when a new home buyer comes to you, they don't have an agent, how do you start with them? What's the first thing that you ask them to do?
Well, Krista, there's a ton of information that a first-time home buyer typically needs, and whether they've talked to someone or not, I find that they generally are missing a lot of information. So I start with explaining the process from pre-approval all the way to settlement, and explaining everything in between that, the importance of pre-approval, different loan products, what your payment is comprised of, what debt to income ratio means, and a little bit about the basic loan programs. And then once they're done working with you and are under contract, what they have to do to get to the closing table, and again, segment back into why it's so important to gather as much documentation as possible up front.
Okay, well, tell me a little bit about the first step. I'm coming to you, David, and I'm home buyer, Jane, and I want to start. I'm super excited. What's the first thing I have to do?
So pre-approval is really the first step, and it's free, it's non-binding. There's no reason not to get that done once you find a loan officer that you're comfortable with and you feel like you can trust. There's a loan application that takes about 15 minutes. It can be done online, over the phone, or in person. And there are certain documents that we typically need. The general documents that most people will need to provide are 1 year of W-2 or 2 years of 1099s and their tax returns if they're self-employed. Again, if they're W-2, we'll need their last couple pay stubs, bank statements and retirement accounts, brokerage accounts, any proof of any funds they're going to be using. We'll need the picture of a front of a government ID. And those are really the basics. We set up the loan, pull credit, import their liabilities, in other words, all their debts into the loan application so we can figure out exactly what they can qualify for in advance. In this market, listing agent wants to see a strong pre-approval letter, which means that we've really verified everything we can in advance so they can, take that offer with confidence and be pretty sure that the person is going to close, subject to the appraisal and the final underwriting approval and the other basics that need to get done, the clean title and so on and so forth.
Makes sense. And I always tell anyone that comes to me and is ready to just go start looking at houses, we need to get you with a loan officer. We need to determine what you're pre-approved for, which is absolutely vital to going with the offer, because you have to have that letter with the offer. So I think that's great information. Can you tell them a little bit about the monetary things on your side that they would need? For example, closing costs. I always tell them average 3% of the sales price is what they're going to need. If perhaps we can get it worked into the offer where the seller could pay some of it. But anything else that they may need, I know they need the appraisal up front.
Sure. So closing costs in Virginia are actually a little bit less than they are in DC or Maryland. On the other hand, property taxes are actually a bit higher on average in Virginia than they are in DC or Maryland. But they will need, as you said, the appraisal cost up front is simply paid for by credit card. Obviously, they have to do a home inspection in most cases, unless they really know a ton about real estate themselves or a licensed contractor themselves. It's another out-of-pocket expense up front. Down payment may or may not exist. There's a tremendous amount of loan programs these days that offer, low money down or no money down. So many clients aren't really bringing a down payment in this day and age, but you have all the various closing costs, the biggest one being transfer taxes. You have title insurance, you have settlement fees. Some loan programs have a processing fee. Other loan programs, such as the VA loan programs for veterans, doesn't have any processing and underwriting fee. But those are some of the basics. There's a recording fee as well, recording the lien with the county for your new mortgage. And then various other fees that may exist or not, depending on the loan program.
Okay, that's a lot of good information. And of course, there's a lot more detail behind that. But real quick, I want to say good morning to Tiffany and Barbara. Thanks for jumping on. And also find out, do you ladies who are watching have any questions you'd like to ask David about the loan process? Let's see. There's a lot of fees involved. I know that. And it's too much to talk about today because it depends. It's all dependent upon the type of loan that you get. But the main ones, what would you say the average loan that you help homeowners get? What's the usual?
Closing costs?
No, the type of loan.
Oh, the conventional loans are the most common these days overall, but there are plenty of FHA loans, which is a government-issued loan, and VA loan. Loans for veterans are pretty common around here as well. I do have more and more people asking me about renovation loans as well. So there is an FHA renovation loan, and then again a conventional renovation loan, which is a private loan. So we really get a fair amount of all, but conventional are the most common in this day and age.
Yeah, I would say the most common ones I've used are the VHDA, the standard FHA, and I haven't seen too many of the conventional, but they do use those.
And it's interesting to hear that because I definitely think that what area you're in will vary, a lot in terms of loan products. Being here in DC, by far the most prevalent loans are conventional, and in different areas you'll see a lot more of others. So that's definitely no surprise. And VHD is a great product. It is a down payment assistance program in Virginia. The loan officer needs to actually physically be in Virginia, so I typically will refer those out. But I am seeing a lot of the DC Open Doors loan program, which is a DC down payment assistance program. The most exciting part about it these days, because down payment assistance has been around for years, but a newer option is the mortgage credit certificate. And there's a similar version of this in Virginia and Maryland, so I will just speak to it in general. And this product, depending on your income and credit, you may qualify for it. You can take 20% of all the mortgage interest that you pay and get it back as a credit. That's a dollar-for-dollar tax credit for the life of the loan. So what that means is if you owed $4,000 to the federal government at the end of a year, and 20% of the mortgage interest was $2,500, you're only paying $1,500. So it's a really big deal. It's literally going to save someone tens of thousands of dollars. They took a look at the numbers and figured out it reduces your effective interest rate by an average of about 5/8. So a lot of people are a bit discouraged now because although rates are still historically low, they are higher than they were before the election. But this is a really great answer to all those home buyers because this really deals with that. A lot of these down payment assistance programs also have a higher rate. But again, if you're coupling it with a tax credit, it's really going to reduce your effective rate. So it's a really great combination.
Oh, yeah. And, Yeah, they are. They are low, and they are a little bit higher since the election, but I wouldn't say they're tremendously higher. They're still below 6% at this point.
Oh, definitely. Yeah. And even the down payment assistance programs tend to be 5% or below. There's obviously products where you don't need a down payment assistance are significantly lower than that. FHA and VA rates are still, below 4%. So yeah, by all means, interest rates are still pretty low, I would say. I did want to talk about, what barriers I'm finding people are having towards home ownership and how to resolve those. But I saw we did have a question.
We do, and that's what I wanted to jump in. Thank you, Eric, for asking. He said, is there a way to pay less than 20% down and not pay the PMI every month?
That's a great question. I love being asked it because, frankly, if you go to a lot of traditional banks and credit unions, you may or may not be able to do that. In our case, yes, there is. You can do a first and second mortgage, which a lot of my clients are doing. And I'll just explain how that works. Someone's buying a $300,000 home. You could do a first mortgage for 75% of the value of the home, and then a second mortgage for 20% of the value of the home. So they would be doing 5% down. But because the first mortgage is essentially a 25% down payment, in other words, it's 80% of the value of the home or less, there's not going to be mortgage insurance on either one of the loans. So yes, there are such opportunities available, and a lot of people are situating their loans like that these days.
Yeah, I would say that's been for quite some time, actually, with the first and the second.
Definitely, and I think after the housing crisis, people were a little bit nervous about anything outside of the traditional just single 30-year fixed. But once people are fully educated on it, and if that matches their financial profile, then it's not a bad idea. What I mean by that is you want to be able to pay off the principal of the second mortgage. The second mortgage is typically set up as a line of credit. So the pro of that is that as you pay down the principal, the payment goes down just like it would on a credit card, as opposed to a closed 30-year fixed or other fixed product where until you refinance or recast your mortgage, the payment's going to stay the same. So if a person is going to be very serious about paying down that principal over time on their second mortgage and eventually getting rid of it, then I think it's a good option, because the rate on the second is either going to be relatively high or an adjustable rate. That is why you want to be diligent about paying off the principal.
Yeah, good advice. I do want to ask you, we briefly started to go into it, but what's advice, some good advice that you can offer to new homeowners or someone getting ready to get started that you're seeing a lot of questions on?
Sure. So there's a couple things that come to mind, Krista. Some people are coming to me and they already, have a lot of debt, and they're struggling because they can't really qualify for a home in the area they're living in. I mean, a lot of areas around here have relatively expensive homes compared to other parts of the country. By the time someone is coming to a loan officer or a bank or whatnot to apply for a mortgage, I'm finding a lot of people have a tremendous amount of debt. And I would just say that it's really important for people to prioritize and prepare for a home. An example of that is going out and financing a really expensive car, which is going to hinder you from buying the home you want, or likely hinder you from that, is really a huge financial mistake. The reality is that that car is not going to be a financial incentive to you. There's going to be no clear tax benefits to that. You're not going to have the ability to enjoy appreciation and build equity the way you would with a house. So, you might be impressing your neighbor with your new BMW, but at the end of the day, that's not helping your pocket. So I would really say that saving and realizing that in the country that we live in, there's tremendous financial benefits of owning a home, and being, careful with your funds and preparing and saving is really the way to go. The other thing is that a lot of people come to me and they have credit issues, big or small. The vast majority of people that I try to help them with that, whether it's with the help of an outside professional or just with me, they get frustrated and they just move on and they forget about buying a home. And that's really a shame. I've had plenty of people work hard on fixing their credit and have success, but people just need to work with someone who's going to explain to them how to do that and come up with a game plan, and it can absolutely be done. There's no need to get frustrated if you can't buy immediately.
Well, let me ask you, how early do you suggest starting the process? If you know you struggle and you have credit issues or you have a lot of debt, how early would you recommend starting that game plan to get ready to buy?
I would absolutely say immediately. There's no such thing as too early. I immediately comes to mind a client of mine who came to me 2 years ago. He had too much debt to buy the kind of house he wanted, but he was very determined to buy a house. He recently came back around to me. He had paid off his car note. He had paid down some credit cards. In doing so, he greatly improved his credit score as well. And now he's under contract to buy a home. He only had about $4,000 to work with, but because of some of the different state and county loan programs, that was enough to get him into a house by, as you said, asking the seller to pay for some of the closing costs. So if you are thinking about buying a home a year out, 2 years out, it doesn't really matter. Just it's well worth talking to a loan officer and getting started. There is no cost or obligation to doing so.
Okay, that's good. No, and I suggest the same thing. Real quick, I want to say good morning to Carly Limbo. Thank you so much for joining. And we are talking to David this morning, a loan officer, and he is answering questions about if you are thinking about buying a home. So please feel free to chime in and ask any questions. There's one more thing I was thinking of that I wanted to ask you. Okay, well, here's the question. If I need a car, but you're suggesting don't buy the big expensive car, how would you suggest going about buying the car? Because I need one to get around. That's definitely a necessity in life.
It's funny you asked me that, Krista, because I recently bought a car myself. You know, there's a couple of different ways I would respond to that question. You know, if someone feels like they need to get a really fancy car, sure, go ahead and do so, but don't buy a brand new car. You know, there's nothing wrong with buying a new construction home. A lot of times they might be a fantastic house that's not going to have issues for a while. I would say that's not the case with buying a car. You know, I actually found a great car that was just 2 years old with only 8,600 miles on it, actually over in Chantilly, not far from you. I did a little bit of research online. I found it exactly what I wanted, and I paid about $15,000 less than what the cost would be for a new car. Why pay that extra $15,000 for a car that has less than 10,000 miles? You know, or excuse me, a car that has, you know, just brand new. Mine is probably not going to have any issues anytime soon. There was no problems with it. The Carfax report was clean. The other option is just buying, you know, a simple, affordable car. A lot of times, if you simply make it clear to a dealer you're serious about buying and that you're aware of, you know, prices that are available out there, you'll get a far better deal. I know my father bought, you know, a Hyundai for far less than what most people are offering them for, because he made it clear that he was aware of, you know, what type of values were out there and eventually found a great deal. So I would just avoid, of course, buying a car that's going to have heavy repair expenses, especially if you're trying to prepare to buy a house.
Yeah, I would agree. I mean, you don't always have to get the newest. It's like the phone. You don't have to go get the newest phone out there just because it's available. We did have another question, though, that I'd like to ask you. How do people on disability buy a home? Carly said she's had 2 people ask her this week. And thank you for sharing, Carly.
Oh, that's a great question. So we can use disability income. So I've had a couple of different situations. There's been people that were buying with someone else and disability income that they received and the other person's income was sufficient. We just need to verify what that disability income is going to be. But any income that can continue for 3 years or more and that can be proven will continue for 3 years or more, or it's just standard that it does, can be used on someone's loan application. I have had situations where, you know, a person's family actually helped them co-sign. So the disability income was not sufficient for them. But a non-occupant cosigner, there's no additional cost to using one. And a lot of times a person can buy or afford a home that they might not otherwise have been able to. Of course, the question that comes into people's minds then is, well, what if that person can't afford to buy the home? After all, you're saying they can't qualify on their own. But the beauty is, and what a lot of my clients are doing, is buying a 2 or 3 bedroom home and renting out a room or two. So their net mortgage payment can literally be little to nothing. Mm-hmm. These are things that people don't think about a lot, but a home can truly be an investment in that fourth way. So, it's not just appreciation, equity, and tax savings. It can also be something where you're offsetting the mortgage with rental income.
And that is actually a really good idea, offsetting and the passive income flow. So I think those are great tips.
It's tremendous. One of my first clients ever, named Patrick, who to this day is a good friend of mine, purchased a home in the Tacoma Park section of DC. It was a home that had 3 bedrooms plus a basement. He was actually renting out 3 rooms in his house. And when I say that he had no net mortgage payment, I'm not exaggerating. He did not have any payment after all of the rent he was collecting.
Wow, that's awesome.
The fact of the matter is, in most cases, for most people, if they're going to be staying in the area for 5 years or more, it does not make sense to rent a home when you look at the numbers. So,
especially with interest rates still so low.
Exactly. And we are in an environment where interest rates are going up. Inflationary expectations are pretty high. The Fed is talking about hiking rates. I just want to briefly explain what that really means, because some people seem to have the notion that that means that consumer interest rates are just going to be pushed up. And that's not what that actually means. It is the short-term rate between banks. And when that federal funds rate is raised, it has a tendency to cause interest rates to go up, particularly beforehand. We see that happen a lot.
Okay. Real quick, I want to say hey to Shannon. Thanks for jumping on, Shannon. Let's see.
Krista, let me ask you, what type of questions or issues are you having, are you seeing with clients of yours or people that are choosing to rent another year? Why are they choosing to rent another year? And it'd be interesting to hear about that.
Well, usually it's the same issues that you see, credit issues. I'm getting my credit together. And I always say now is the time then to get with a loan officer. Find out how much you need down so you can prepare to save and come up with the strategy game plan to get your credit where it should be, because they think they have the tendency, what you don't know, you just don't know. So people have the tendency to think that they will just never qualify. They don't know what the minimum credit score is. They don't know anything about having a steady, the 2 years with the job. And if you hop around a lot, it looks bad, or at least you have to justify it or explain it away. So knowing what you need to do to prepare is the main thing. And that's really what I deal with when I'm talking to renters about purchasing a home, or they don't think they have enough money down. And I think those are just old myths that people don't really understand how things work. And getting the information in front of them, the earlier the better. Really, that's the real thing that I experience.
I see. Are people hesitant to talk to a loan officer when they have credit issues?
They are. I mean, either number one, they may not be serious, or two, they are just like, oh, I will one day. I'll get with them when I'm ready. And I said, well, if you're preparing to buy in the future, in the next year or two, now is the time. You should be getting with them right away. So getting them to understand that the earlier the better is really the way to go.
And I do want to make one comment on that. I actually met a real estate agent who referred a credit expert to me. And, a lot of people go to some of these larger credit repair companies. They see a lot of good reviews online. They trust the reviews. The company will charge them $700 or more, sometimes right off the bat. And they get very little done. After that, they typically find themselves chasing the credit repair company. But they've already paid and not gotten results, and it's a huge problem. Mm-hmm. The individual that I've been working with, whose name is John Pando, he's the president of J&E Consulting. It's actually a company out of Wyoming, has really been doing great work for people. They're also a lot more affordable than most, and you actually pay per item that you need resolved. So you're really paying for the results that you're going to get, as opposed to some flat fee or some monthly fee where the company is not motivated to get things resolved. And if anything, they kind of dodge your phone calls because you are, income for them.
Exactly. No, and I'd love to get his information because are people that obviously I talk to that need that assistance, and someone reliable would be great.
Absolutely. And, I'm going to be giving some pretty strong opinions on some other matters in a second. And I wanted to say that I wish the whole country was watching this right now, because these are things that people are completely unaware of in this day and age. The lending industry is heavily regulated. So the type of corruption that you saw pre-housing crisis, you might not see today. But what you will see is certain banks and credit unions discriminating in a much more quiet way that kind of flies under the radar. I had a client recently come to me for a second opinion. They were going to trust their credit union because they had been banking with them for years, and they felt like, well, we can trust them. Anyhow, the realtor convinced them to get a second opinion from me. The interest rate that I was able to offer was 5/8 lower.
Wow.
The same product, a conventional mortgage product with no monthly mortgage insurance. And I was also able to give them a $3,000 credit. Again, same loan amount, same credit score, just an incredibly better deal. And it was clear as day to me that this credit union of theirs was taking them for a ride, and thought, well, these people trust us and we're going to take full advantage of that. The clients were so shocked by how much of a better deal it was. They insisted on meeting me in person because it was too good to be true. And the reality is that while First Home Mortgage, the company I work for, has competitive rates, it's not that we have some godlike rates that aren't available anywhere else. The reality is that this particular credit union was about to rob these people.
Yeah. Well, a lot of times the bigger banks, they can't do as much, honestly, as say the loan officers can. It just doesn't happen.
You're right in many cases. I mean, we have a lot of flexibility with what we can do and closing faster and all that. But I was pretty shocked by just how awful this estimate was that was given to them. And, it seems like people feel like they can trust a certain organization because they think it's not for profit or whatnot. And I'm not here to bash all banks and credit unions. There are some good ones out there. There's some good and bad private lending organizations out there, but it's important for people to go online and research and find out. And this particular credit union that I mentioned has horrible mortgage reviews online, but the people didn't bother to do their research. So I'm constantly telling people, whether you want to work with me or someone else, do your research and see what's out there. There's plenty of information online that you can find about lending institutions that is honest and accurate.
And that's a great point. It's about doing your homework. And even if you don't want to work with me, because I say not everybody's going to want to work with me. It's about chemistry. And if you have a good relationship with a real estate agent or a loan officer, you have to be able to trust that person. But do your research. And I want to help people. I'm not going to pressure them to work with me. I mean, everyone is out here. Obviously, that's my way I make money. But at the same time, I don't want our experience to be miserable. I want to help you do the right thing for yourself. And I'm sure you feel the same way. It's about helping people and helping them get what works for them. And it's not something that's going to hurt them in the long run or getting taken for a ride.
Absolutely. And I love the fact that you're with a smaller brokerage, not one on a national level. There's nothing wrong with those companies, but I have found that individuals like yourself oftentimes really do care about their clients. And I'm very proud to say that I'm an independent loan officer. And what that means is that I don't have any real estate brokerage that is financially incentivized to work with me. The people that are referring me or the people that are coming to me for a loan are doing so because of my reputation with individuals and on the internet as a whole. There are a lot of loan officers out there. And again, this is information that the public is generally not aware of, where they are actually helping pay a real estate office's rent, and they rent space in the office. So of course, the real estate broker is pushing for these loan officers to be used in most cases, not because they're going to do a great job, but rather there's financial incentives there.
Right.
Why the Consumer Financial Protection Bureau still has that as something that's legal is beyond me. But again, I'd love for the world to know that you might not be referred a loan officer for the right reasons by many real estate agents.
Well, I would tell you, I do not refer anyone that I don't believe in. I support the people that I work with and that I believe in and that I know are going to do a good job. I will not refer someone because to me, it's my reputation. It's my referral to you. And if you have a bad experience, it's a reflection on me. It's like, how would you refer me to this person?
Sure, absolutely. And you'll find honest real estate agents, honest loan officers, and dishonest ones anywhere or with any company. But it's really important for people to take the time to interview somebody and not just immediately choose them because they have a lot of reviews on Zillow or because someone else might have told them that they're decent. You have to work with someone that you genuinely feel you can trust, like you were saying.
Exactly. Well, you happen to have some amazing reviews on Zillow, and I know from attending some of your first home buyer seminar that you are very driven. You're very available, which is important when you are writing an offer, and we need that pre-approval letter to go. So I would definitely refer you out to any of my clients, David.
Thank you, Chris. I take a tremendous amount of pride in the work that I do. I get a lot of my inspiration from my father, and my father was a gynecologic surgeon and arguably one of the better ones that was ever around. He actually helped develop some of the procedures that he did, and he's an enormous inspiration to me. He was described online as an angel by some of his clients, and he was written about in the New York Times in 1997 because he was literally saving tons of women's lives. And while I'm not my father, and I don't think I'll ever be as impressive as him, I do want to be the best loan officer around, and I do whatever it takes. I recently hired a great loan officer assistant, so now I have a little team, and that allows us to really be available around the clock.
That's excellent, and that is an amazing story. I've seen some of the paintings that you post that are your father's. They're very nice.
They're pretty incredible, and I'm thinking of asking him to actually paint some of the homes that clients buy and to possibly have them as gifts. So I'm going to see what I can do.
That's awesome. Well, I'm so glad that I got to talk to you this morning, and I definitely want to have you back on the show. You provided so much information and great tips for home buyers out there. If someone wants to get in contact with you, how would they reach out to you?
Thanks for asking that, Krista. My cell phone number is 610-348-3772. And I know that I talk pretty quickly, and there's a ton of information that hasn't been provided, even though I've tried to touch on some different points. So I'm more than happy to go over the entire process with someone, or just answer any very specific questions, delve into their credit or their finances, or help them however I can.
Yes, please feel free to reach out to myself or David at any point. I can get you in contact with him if you didn't catch his information. I'm also going to provide a link in the comment section. So thanks again, David. And please, anyone watching, if you know someone who may benefit from this show, please tag them in it. Share the stream. We really appreciate it. And we will see you next week.
Thanks a lot, Chris. I appreciate being here, and have a great day.
Thanks. You too.